Imagine putting in the same amount of work time and time again, knowing that no matter what you do, you are going to produce less and less over time. That's the conundrum faced by Bitcoin miners everywhere, almost like clockwork every 4 years. I'm talking, of course, about Bitcoin halving, which many people consider to be the most important event in the calendar for crypto. But first, a few basics. There are 21 million Bitcoin, and there will only ever be 21 million Bitcoin. And while the supply is fixed, more than 90% of all Bitcoin have already been mined. Simply put, Bitcoin mining can be summed up to using specially designed computers to solve complex math equations and create all these blocks of data, which basically record stores of transactions that cannot be changed and cannot be deleted. All of crypto, Bitcoin included, is decentralized, so transactions are verified using a technique called proof of work. It's kind of like doing a really hard math problem and then having all of your classmates double check your work. And if you're right, your work or those transactions are then added onto Bitcoin's official blockchain. It means that miners compete against one another, and after successful verification, miners are rewarded with brand new Bitcoin. While mining may sound like a mathematical gold mine of unlimited potential, mysterious Bitcoin founder Satoshi Nakamoto developed a strict system of limiting the number of Bitcoin that can be mined. And that brings us to Bitcoin halving. Baked right into Bitcoin's original source code is a provision that says the reward for mining gets cut in half over time in order to ensure the currency is deflationary. In other words, the idea is that Bitcoin will gain, not lose, value over time. Think of it like a 2-for-1 stock split, except the value, or the reward of mining, is actually reduced in order to keep the price of Bitcoin high. So, how do you know when a halving is going to happen? It's built right into Bitcoin's source code. After the overall Bitcoin network has mined 210,000 blocks, the block reward is cut in half like clockwork. To date, we've had 3 Bitcoin halvings, 2012, 2016, and 2020. And since it takes about 4 years to mine 210,000 blocks, that brings us to 2024. What was once a reward of 50 Bitcoin was eventually halved to 25. Then again from 25 to 12.5, and 4 years ago, from 12.5 to 6.25 BTC. This time around, the reward for mining one block will go, you guessed it, from 6.25 to 3.125 BTC. The process will continue every 4 years until sometime around the year 2140, incrementally reducing the reward for Bitcoin miners in half each time. There's also notable price action for BTC closely correlated with each halving. The price of Bitcoin increases with increased demand. And while past performance is no guarantee of future results, BTC has spiked in the years following each of the 3 prior halvings. After the halving event in 2020, BTC price skyrocketed from $9,700 to more than $67,000 within the following year. What's great for Bitcoin's price may prove to be the greatest challenge for Bitcoin's miners going forward, and make it more likely that those miners will simply look to other tokens for their mining. Then again, lots of cryptocurrencies have fixed supply, meaning lots of other halving dates as well. Cutting the reward for mining Bitcoin or any other cryptocurrency means the same amount of work for increasingly diminishing returns. So come 2140, will we still even be talking about Bitcoin mining?